all my trader homies? It's Kevin, back with my favorite video of the week. It's Sunday, you know what time it is. The top 4 stocks to trade right now. You might be asking yourself, Kevin, I thought you were a day trader. Why is this swing trading video your favorite video of the week? Well, swing trading is awesome because it doesn't matter who you are, what you're wearing, what you look like. As long as you put in the work, find the valid trade setups, you can be profitable. You can wear your underwear, you can wear your whitey-tighties. Yeah, that's right. I rock some whitey-tighties here and there. They keep everything nice and situated, if you know what I mean. And the absolute best part about swing trading is that you don't have to be staring at your computer screen all day long. You can put in the trade, monitor it as you go about your day doing other things. So what this video is my top 4 stocks to watch that are setting up for valid trades for the upcoming week. I put quite a few hours into finding these trade setups, and all I ask from you guys in return is that you smash that like button, give it a quick little jab in the face, and also hit that subscribe button for me as well so you know when I post all my future videos. I'm going to be sticking to a stricter schedule here, posting the top upcoming swing trade videos on Sunday, the top penny stock swing trading videos on Wednesday, and then Monday through Friday, I'm going to be posting any live trades that I take, those kind of market analysis videos. All right, so let's get into these trades. Roll the tape. Our first trade is going to be quite controversial. It's going to be on NKLA, the Tesla competitor. So you might be asking yourself, hey Kevin, but wait, you're bearish on Tesla, so how can you want to get long NKLA? That's a tongue twister. NKLA. Sally went to the seashore with seashells. Well, the answer is, I don't care about the company. I don't care. You can tell me Tesla's a technology company. I don't care. The only thing I care about is the charts, right? We're swing trading. We're only holding these trades for maybe a few days to a week or two. So I don't care about the company's fundamentals. The only thing I care about is the chart. And NKLA's chart is setting up for a beautiful swing trade. NKLA has blasted off from $10, skying up to highs to $94. It's now pulling back and setting up for a beautiful bull flag formation. This bull flag can allow us to take an entry with limited risk but massive upside potential. Because if it breaks out of the bull flag and heads towards highs, we have a very small risk and unlimited profit potential there. I will probably be peeling off profits towards the highs as we break out of the bull flag formation and head back up. Remember, we need to trade like a father sending his only daughter off to her first prom, and the guy shows up at the door, knocking on the door, driving a sports car. He's got a nose ring and a beard, and you see a pack of condoms fall out of his back pocket. We need to trade like that father. We need to be very protective, and we need to manage our risk on this trade because this NKLA is very volatile. So we need to dive down into a faster time frame. So if we look at this 30-minute chart, we can see that NKLA just pretty much consolidated all of last week and just kind of chopped around. Well, what that allows us to do is it allows us to use the low of that consolidation as our risk. $60 has held support, and that will be my stop loss. I will buy any dips towards that level, looking for my first profit up over $72. Alright guys, so that's it for NKLA, and let's move on to the second trade. Our second trade is going to be on American Airlines. The stepdaughter of the airlines industry took a pretty hard beating last week as the market made American Airlines scrub the floor like Cinderella. However, American Airlines is still setting up for a move higher. It's setting up in a beautiful symmetrical bull flag that has me wanting to ride it like a rodeo clown after drinking 21 Red Bulls. I'll use the $15 pivot as my risk and look for this thing to take flight. No pun intended. My final take profit will be up around $18, but I'll be peeling off some profit along the way up. This is a low probability setup because we do need the overall market to help us out in this trade, but the risk to reward is huge, and that is a big but. So I'll be eager to, starting Monday, I'll be buying any dips on American Airlines. That's going to do it for AAL. Let's move on to trade number trace. The third trade is going to be on Roku, ROKU. Roku has absolutely gone bonkers since it bottomed after the Roni sell-off, blasting off from those lows. Exploding like a 2-liter Coke with a pack full of Mentos in it, Roku has gone from $58, where it based out at the Roni lows, and just recently hit highs of $138. That's over an 100% gain in just a few months, and I believe that move is overdone. Roku is setting up for a short trade and has amazing downside potential that we can use to profit from. There is a trend line on the daily chart that is as valid as they come. It has been tested several times and is hold, and we can use this trend line to risk off of. This will give us an extremely high risk to reward scenario, and as we dive into a 15-minute chart, we can see the trend line has been respected. On Friday, Roku shot into the trend line, respected it, and pulled back. I will be using put options to capitalize on this trade, looking for Roku to pull back down under 115 before I start taking profit. Be careful with your put options and buy the monthly contracts for July. Yeah, I'm going to buy the July contracts on this trade here. So that's going to wrap up the Roku trade. Let's move on to trade number 4. Trade number 4 is going to be an SPY or the SPY, the S&P 500 index. This is going to be another options trade as the market dumped last week as fears over the Rona sparked back up. The market on Friday sold off very, very hard. The Roni fears may be valid, and the market definitely should not be trading at these levels given the state of the economy. But, big but, everybody and their mother and their brother is short right now with put options. The put to call ratio is over 1.5 to 1, meaning that everybody is expecting the market to roll over. And I don't want to be trading with the masses. I want to be on the other side of the trade. So I believe next week the market will find its balance, find a base, and force all those early shorts, all those people with the put options out before we get the actual rollover. The put to call ratio is going to need to level out before the actual move happens. Due to this, I'll be looking to buy call options on the SPY next week, probably the July monthly contracts as there's more volume to be in liquidity in those monthly contracts. I'll be looking for the massive volume traded at the 300 level to hold support, and I'll be looking for a move back towards the highs, taking all my profit off before we hit the highs. This is a classic example of not shooting your shot too early, as I think the masses are doing by buying put contracts. It's just like shooting your shot too early on a woman, right? You can't do it. You just keep getting your hand slapped away. She keeps slapping your hand at the movie theater when you tried to do the old reach around on her. You can't shoot your shot too early. This is called don't shoot your shot too early trade. All right, we got a bonus trade, a trade number 5, and that's going to be on Royal Caribbean Cruise Lines. So Royal Caribbean Cruise Lines shocked the market last week and the whole cruise line industry. And they also shocked all the grandmas who wanted to whip out their bikinis this summer and take a cruise when they announced that there will be no cruises leaving the United States this summer. RCL and the rest of the cruise industry took a hard dump, a big smelly hard dump, and sold off very hard on Friday. But this is going to be a classic sell the news, buy the rumor kind of trade where I think that the sharper traders already knew that this was probably going to be happen, and it was going to be priced into the ticker's price already. We have some support we can risk off of, and I'll be buying dips towards the low 50s and using that 50 support as my risk. This will be a longer term trade, and I will be looking for this RCL to make a move back up over $60 before I start taking profit. We will also need the overall market to help us out in this trade. So I don't like to depend on the market to push my trades up, but this is one of those instances where if the market's tanking because of fears of the Roni, then RCL is probably going to have some issues. But if we do get that help from the market like I'm expecting, the trade will work out 9 times out of 10. That's going to do it for this video, guys. I hope you guys got something out of it. Make sure you subscribe, hit that like button, and I'll catch you in the next video. Thanks for the view. Thanks for checking my channel out. Peace!